I asked 50 freelancers one question: why are you always broke? Every single one blamed their income. Not enough clients. Not enough gigs. Not enough money coming in. They were all wrong. And once you see why, you'll never look at your bank account the same way again. If you're a freelancer, a contractor, or you run a small business, and you've ever stared at your bank account after a good month and thought, wait, where did it all go? This video is for you. Not the 9 to 5 crowd with one predictable paycheck. You, the person juggling 5 invoices, 3 clients, and 0 idea what next month looks like. By the end of this video, you're going to understand the real reason freelancers stay broke, even the ones making 6 figures. And I'm going to give you the exact framework to fix it. This isn't about hustling harder or landing bigger clients. This is about finally running your business like a business so you get to feel something most freelancers never feel. Control. Not, I hope I have enough. Actual calm. I know exactly where I stand. Control. Here's what I found when I actually dug into those 50 conversations. The freelancers making $40,000 a year and the freelancers making $150,000 a year had almost the identical complaint. I never know how much money I actually have. Not how much they earn. How much they have. Right now. Today. That they can actually spend. Because here's the freelancer trap nobody warns you about. Your income isn't a paycheck. It's a pile. One client pays you $3,000 on the 3rd. Another pays $800 on the 17th. Then nothing for 3 weeks. Then a $5,000 payment lands and it feels like you're rich, so you upgrade your laptop, book a trip, finally get that co-working membership. Then tax season hits. Or a slow month hits. Or both at once. And suddenly you're transferring money from savings just to cover rent, wondering how someone who billed $9,000 last quarter is now panic-checking their account balance like a broke college kid. This isn't a you problem. This is a system problem. You're running business income through a personal spending brain. Every dollar that hits your account gets treated like it's yours to spend, when a chunk of it was never yours to begin with. Some of it belongs to future tax you. Some of it belongs to slow month you. And if nothing tells your brain that upfront, you will spend it. Every time. That's the answer nobody in those 50 interviews gave me on the first try. It's not that they don't earn enough. It's that every dollar they earn is undifferentiated. No label, no job, no destination, until it's gone. So here's the exact system to fix this. For steps. Real numbers. Let's go. Step 1. Split every payment the moment it lands. The second a client payment hits your account, split it immediately into 3 buckets before you do anything else with it. A simple ratio to start: 60% operating, 25% taxes, 15% future and buffer. You can open free sub-accounts at most online banks for this, or even just 3 separate savings accounts. Why it works? Right now, your brain sees $3,000 came in as one number, spendable. The moment you split it, your brain sees $1,800 to live on, $750 that's not mine, $450 that's for a slow month. That's it. That's the whole trick. You're not budgeting harder. You're removing the decision entirely at the exact moment temptation is highest, the second the money lands. Quick example. Sarah, a freelance graphic designer, gets a $4,000 invoice paid. Old way. It sits in checking. She feels rich, spends $1,200 on new equipment she didn't need yet. New way, $2,400 goes to operating, $1,000 to taxes, $600 to buffer. Automatically, same day. She can only spend the $2,400. The decision is already made. This one habit alone is why some freelancers making half as much as others somehow feel twice as secure. It's not the income, it's the split. Step 2. Pay yourself a salary, not your bank balance. From your operating bucket, pay yourself the same fixed amount every 2 weeks, like a paycheck, regardless of how much came in that period. Calculate this number by averaging your last 6 months of operating deposits and setting your salary slightly below that average. Why it works? This is the single biggest mindset shift between someone who feels like they're hustling for scraps and someone who feels like they run a stable business. You stop asking, how much money do I have right now? A question with a different, anxiety-inducing answer every single day, and start asking, did I get paid this cycle? Which is either yes or no, calm either way. Quick example. James, a contractor, brings in anywhere from $2,000 to $9,000 a month. Instead of spending based on whatever's in checking, he pays himself a flat $3,200 a month from his operating bucket. Big invoice months, the extra just sits in operating as a cushion. Slow months, he's already covered, the cushion pays his salary instead of a client. He hasn't had a panic month in over a year, even though his actual income still swings wildly. Step 3. Automate quarterly taxes so they're a non-event. That 25% tax bucket from Step 1? Never touch it. Set a recurring calendar reminder for the IRS quarterly deadlines, April, June, September, January, and set up an automatic transfer from that bucket to pay estimated taxes the moment each deadline opens. Why it works? Quarterly taxes are the single biggest freelancer financial trauma. Not because the math is hard, but because most freelancers treat it as a surprise ambush 4 times a year instead of a bill they already paid themselves. When the money's already sitting there, tax season goes from "oh no" to "oh, that's already handled." Quick example. Maria used to owe the IRS around $7,000 every January and scramble to find it. 1 year pulling from a credit card at 22% interest. After switching to the split and set-aside system, that same $7,000 was already sitting in her tax bucket, built up $100 to $400 at a time throughout the year. Same tax bill. Completely different experience. Step 4. Build a buffer that ends feast or famine, not just savings. Keep growing that 15% buffer bucket from Step 1 until it covers 3 to 6 months of your salary number from Step 2. Not your total expenses, your actual salary. Once it hits that target, stop routing new money there and redirect that 15% toward business growth or personal savings goals instead. Why it works? This isn't a generic emergency fund. It's specifically sized to smooth out the feast or famine cycle that's unique to irregular income. Employees don't need this the same way. They know a check is coming every 2 weeks. You don't. This buffer becomes your predictable paycheck during the slow months. Quick example. David, a freelance developer, hit a brutal 7-week gap between contracts last year. Before this system, that gap would have meant missed rent and a maxed-out credit card. Instead, his buffer, built up to $9,600 over the previous year, quietly paid his $2,400 a month salary for those 7 weeks like nothing happened. He said it was the first slow season in his 6-year freelance career where he wasn't scared. Let's go back to those 50 freelancers I mentioned at the start. I followed up with about a dozen of them 90 days after they implemented just the first 2 steps, the split and the salary. Every single one said the same thing in different words. I don't check my bank account out of fear anymore. One freelance copywriter put it perfectly. She wasn't earning more. Same clients, same rates, same roller coaster income. But she said for the first time in 4 years of freelancing, she felt like she was running a business instead of surviving month to month. That's not an income problem being solved. That's a systems problem being solved. So let's bring it back to that original question. Why are freelancers always broke? It was never the income. It's that irregular income, run through a system built for steady paychecks, will break anyone. Split your payments the moment they land. Pay yourself a real salary. Let taxes handle themselves automatically. Build a buffer sized for your actual life, not a generic rule of thumb. Do those 4 things and you stop being someone who survives freelancing. You become someone who runs a business, one with cash flow you understand, taxes you're never scared of, and a safety net built for how you actually get paid. That's the difference between freelancing like it's a series of lucky months and running your business like it's actually yours. If the system made something click for you, hit subscribe. I break down exactly this kind of freelancer-specific money strategy every week. No fluff, no generic personal finance advice that doesn't apply to how you actually get paid. And before you go, drop a comment and tell me, what percentage would you use for your operating, tax, and buffer split? Are you a 60/25/15 person? Or does your business need something different? I read every single one, and I'm pulling the best answers for next week's video. Speaking of which, next week I'm breaking down the exact quarterly tax calculator I use, step by step, so you never overpay or underpay the IRS again. Subscribe so you don't miss it.